Hey there, this is Darla Nunley with Real Talk.
And I am Judy Hayes. Welcome to the show today. We are going to break down what all goes into a monthly payment for your mortgage. So one of the very first things we ask you to do is get pre-approved so you know what your buying power is. And if you have went online, you can go to Zillow or several mortgage calculators, and sometimes that number doesn't add up.
Right.
Okay, there's 4 different terms or items that generally go with your mortgage payment. Darla, what's number 1?
Number 1 is your principal,
Number 2,
your interest,
number 3,
property taxes,
number 4.
and your insurance.
Okay, so if you're on a Zillow calculator, they're only going to give you the first 2. Okay, your
Correct.
principal and interest. Because why? They don't know what your taxes
they don't
are.
know what your taxes are, and sometimes they might estimate what your insurance will be.
Right.
But they typically leave that off.
So if you're looking at a $300,000 house and Zillow says your mortgage payment is $900 a month, that's not right. You know, you can kind of go with the 1% rule. If it's $3,000 that you financed or $300,000, your payment's going to be around $300,000.
Right. And remember, sometimes they don't calculate the current interest rate or what your interest rate would be.
Right, and I have a really good mortgage calculator on our website at realtybyjudyhayes.com. Click on the mortgage tab in the mortgage calculator. But again, you've got to know what the interest rate is. Okay, you can kind of estimate that. And let me say that your loan officer, when you are speaking to them, they're only estimating what it is today. Okay,
Until you lock, it doesn't matter.
And when do you lock?
You lock once you get a contract.
Once you get a contract. So let's just say you get a loan approval today, but it takes us 2 or 3 months to find you a house. That's very common. So we will read.
And it happened in last year with 2022. At March, they started going up, and by May, they were almost 1 3/4% higher in just 3 months.
And that can knock you out of the price point that you're in. It could lower your price point or make a monthly payment where it's uncomfortable for you.
Right.
So
and
as that changes,
and
we
everybody
need to
right now is monthly payment driven. A lot of times y'all are coming out of apartment rentals or you're coming out of home rentals and you're looking at, this is what I pay now, this is what I want to continue to pay.
Right.
And we get kind of a shock going on when we see what that mortgage is on a $230,000 house.
Yep.
So let's get into what your principal consists of.
Okay, so your principal is actually the money that you're paying towards the price of your home. So remember, if you've done a 30-year mortgage, it's just like a vehicle, but spread out a whole lot longer. The first several years, you're paying a very, very, very tiny percentage to your principal.
It's about the first 7 to 10 years.
Yeah, you're paying interest because
paying
they're going to
interest
get their
the
money
entire time.
first. Okay,
Correct.
so you're not digging away to that principal. So here's 2 kind of things to help get you ahead in that principal. So number 1, what I do is bi-weekly payments. So if my mortgage is due on the 1st of every month, I get it ahead of them and I pay it every 2 weeks. So the first time I double up, so you're actually paying ahead of the game. So you're actually paying ahead. You don't actually increase your mortgage. So if your payment's $2,000 a month, it's still going to be, you're just going to pay $1,000 2 weeks and $1,000 2 weeks later. And actually by the end of the year, you're actually paying an extra payment. Or you can add $100 to your payment every month. That will actually knock off 9 to 11 years of your mortgage. That's crazy. That's easy. That's Starbucks money. Just go to Starbucks, 3 times less a month and put that money into the best asset that you will ever have.
Right.
What else? So your taxes. Number 1. They generally go up every year. We're going to be honest here. You got to protest those. We had a show on that a couple of weeks ago. You can always ask us every year. We can run an appraisal for you and let you know what your house is valued at. You need to protest those taxes every single year.
Right, and it's about a 10% increase every single year is what Montgomery County, Harris County, San Jacinto County, Walker County, they're all following.
The whole Texas.
They're all following the same model because honestly, we've been behind in our market values and now they're trying to play catch up. Why are they playing catch up? Because those property taxes support your emergency services, they support the local colleges, they support the road maintenance, and they support the schools, as well as if you have a MUD, they support your infrastructure within your subdivision. So in all fairness, there is a need to increase those because as your household inflation is increasing, the cost that it takes them to keep your roads from being pothole heavy are also increasing.
Same thing with your insurance. I encourage you to shop that every year.
Absolutely
shop it. And what happens is when you find a cheaper version of that, you can give that information to your escrow officer and then they will adjust that. So let's talk about when you do not put at least 20% down, you do not have an option. You must have principal, insurance, taxes, and insurance all combined into one payment, okay, period, and you pay that every month. Most people like that because they know that everything's getting paid for, okay?
Right.
So what happens sometimes, you open up your mail out of the first of the year and you're like, oh my God, they say I'm short in my escrow and they're trying to increase my monthly
they're
payment.
telling me that my monthly payment's going up.
Or I need to send them a big check. Why does that happen?
Well, mainly because the increases in your property taxes and your insurance, if you're paying attention to what comes in the mail, which you should be, then that is going over to your escrow account. Your escrow account is what holds all of those items, and they pay them out at the end of the year, the beginning of the year for that.
So the main thing that's going to go up is your taxes.
The main thing that goes up
So
is
when
your
you're
taxes.
watching that is going to trigger your mortgage company. They have to pay the bills. So your taxes are paid in arrears.
You're paying the year before.
Your insurance is paid ahead of time. Okay. It's
Yep.
a little janky. Don't ask me why they don't do that the same. Why can't everybody be the same? But know that. That's why every single year, if you don't dispute your taxes and shop your insurance, it's going to creep up every year. So you're short in your escrow. That payment's going to go up, or they're going to ask you to pay a check that's going to cover the rest of it for the remaining part of the year. So let's say your taxes went up $1,000. Guess how much money they're asking you for?
Correct.
Almost $100 a month, or $1,000 check. Okay. Know that your principal and your interest never change. Your interest is locked in unless, there's always an unless, you did some variable rate, which is very odd right now, but I had to throw that in there. You're generally on a fixed interest rate right now.
Yep.
Okay. But if you have any questions on that, please do not hesitate to call Darla and I. But just know, if you were online at any type of mortgage calculator, they're very helpful. They can be very good, but make sure all 4 of those items are in your calculation to get an accurate amount of what your monthly payment
So
would be.
again, this is a really good reason why your online buying process actually starts with finding a realtor, because we're going to hook you up with the person that's going to be quite upfront and honest with you, and they're going to help you meet your financial goals. So if you don't understand what's going on with a mortgage payment, principal, interest, taxes, and all the things that increase and decrease, and how your payment goes up and when it goes down, you're going to want to start with somebody to educate you first, because what we don't want you to do is to get into a situation where you're calling us going, or you're calling the mortgage company saying, I don't understand, why did my note go up $100? And I actually had this happen not too long ago on a new construction.
New construction is
he got a
notorious for this.
$700 per month increase.
Okay, so why does that happen? And I hate it when new construction lenders do that. When you buy a new construction home, they're only taxing you on land value only, because there hasn't been a house there to be valued at.
It all depends on the lender.
I know. That's why you need a realtor to know what's going on and double check that. You want that loan and that amount of escrow to be taken out from day one when you close. That closing cost, go ahead and get that monthly payment where it needs to be, instead of leaving it low and then saving $500 a month and catch it up next year. People don't like that.
They
don't do it
because they don't remember, and that's exactly what happened to him. He didn't remember that we told him, and they told him at the closing table at a new construction. I won't remember. I won't say which one. But they told him, oh, just don't forget, you've got to save an extra $500 or $700 a month, because the next year, when the property tax appraisals come out and they have your home improved on the property value is going to go up, and your property taxes are going to go up. And so he calls me in a panic.
And when that happens, it puts you in a very bad situation, because honestly, once you buy a new construction home, you do not want to call us to come put your home on the market within 2 years, because you're still competing with new construction, and it is about 99.9% guaranteed that you don't have equity built in that house yet. Okay, so we don't want that.
That phone call and that stress on you.
Not on that. Make sure you understand the whole process. So again, I'm Judy Hayes with Design Realty Group.
And I'm Darla Nelly, and we're with Real Talk Today.